This is like a whirlpool. You don't escape the whirlpool or the black hole once you're in it. It's a mathematical certainty, and that's the definition of a Ponzi scheme. That's what people don't understand. They hear the term Ponzi scheme, and they think it's some kind of like joke of a term. Or when they reply it to Bernie Madoff, they don't realize that he was actually running a theoretical Ponzi scheme as opposed to, oh, he was a criminal, he just stole money. No, when you need something to grow larger and larger just to survive, and of course, it not only has to grow larger, but you have to maintain confidence in its integrity. That's what a Ponzi scheme is. That's what fiat currency is. That's what QE is. That's what zero interest rates is. Once you're down at zero, you can't ever rebound from it.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. Andy Hoffman is returning to Reluctant Preppers. He is the marketing director of MilesFranklin.com. He is a well-known commentator and observer on the global economic and financial markets and scene, talking about risks and the instabilities and imbalances in the overall economy. Andy's here back with us on Reluctant Preppers to answer questions we have that affect individual families and homeowners. Andy, thank you for joining us again on Reluctant Preppers.
Oh, it's a pleasure to be back.
If we could first have you give us maybe a 5-minute sum up of what you see as the key risk factors that you're seeing playing out in the macro economy, and then I'm going to zoom in on some specific questions related to how people can answer questions of family and friends or associates who question why people have concern, why they are taking precautions, why they're trying to reduce risk of their families, and things that we can use as specific examples when we're talking with people. But if you could first start us off with kind of a high-level overview of what you see as the current status and outlook of the global economic picture specifically from a risk standpoint.
Well, essentially, when you have a fiat currency Ponzi scheme, which is what they all are, it ultimately causes massive debt accumulation, which must be discharged either by hyperinflation or default. It's that simple. And right now, we are in the final stages of the largest fiat Ponzi scheme in history. The largest meaning it's the only one in history in which all countries are involved. There's not a single country whose currency is backed by anything. And the telltale signs that you're in the final stage is when the debt is accumulating exponentially, when currency volatility is destroying the ability of, one, people to fund their existence, two, for business to be able to do business, and three, it causes hyperinflation in various parts of the world. This is where we stand right now. This is why the global economy is sitting not just at its lowest point since 2008, it's at its lowest point of our lifetimes. Across the board, economic data is worse than it was in 2008 unequivocally, and of course debt is exponentially higher. And now you're watching all the currencies around the world collapse one at a time. You're seeing a liquidity vacuum as people are rushing to the, quote, safety of QE and government-supported financial markets. And you're seeing the instabilities caused by inflation from falling currencies. So throw in what I call the final currency war, which is the political impetus to weaken currencies on purpose because they believe it will get them more jobs, which of course it doesn't. And you have, what I call the terminal phase. And so I think we're getting to the point where something terrible we're seeing terrible things happen all the time, but something is going to break the back of the powers that be's hold on financial markets at some point, probably quite soon.
Now, in the specifically in the precious metals area of gold and silver, it's been confusing for a lot of ordinary people, counterintuitive. We keep being told that there's record demand, people buying, especially in India, China, and maybe some other places, gold particularly, but gold and silver at record levels, and yet we're seeing record or near-term low prices. Can you just help us get a little bit of insight into what the heck is going on in the physical supply and pricing of gold and silver?
Well, it's no different than saying that stock markets around the world are hitting all-time highs with all-time low fundamentals, falling earnings, all-time high price earnings multiples in a time where you have no growth. In fact, in the United States, they're now expecting earnings and revenues to be down this year for the year, and yet the Dow is trading at an all-time high multiple, higher than 1997. Higher than 2007, higher than even 2000 peak of the internet bubble. And the same thing with bonds trading at the lowest yields in the history of mankind, with the greatest debt loads, the worst deficits, and the highest inflation of all time. It's called market manipulation. The government naked shorts gold, silver, and of course mining shares to their heart's content to try to prolong this game. Now on the physical side, there's unquestionably all-time high demand. I mean, we're in China, last year was a record level, and this year they're running at 15% above that level. And in India, they put these tariffs on in 2013 to try to slow demand, and yet the black market developed, and now this year demand is taking off in the regular market as well. So there's no question that we're at a record level of demand right now. It's just a matter of the paper markets. They've become very good at manipulating, as I said, stocks, bonds, pretty much everything, including paper, gold, and silver, which I've been reporting on for the past 13 years. The problem is that now supply has clearly peaked, particularly in gold, and with this demand increasing and the supply likely to be decreasing dramatically, and there's not much inventory left, well, something's got to give. And, you say, where did it come from that they were able to keep the price down? It came from official inventories. It came from the supposed 8,133 tons that Fort Knox was supposed to hold. I can assure you that it's all or nearly all gone, and probably a lot of the Western European stashes are gone too. Conversely, the Eastern stashes are probably far higher than you believe, and at some point in the future, China and others are going to reveal how much they actually have, because mathematically, all their buying had to come from somewhere. And so, that's going to come in time. It may come a lot sooner than people believe. And with so many issues going on, be it Greece, be it, all these potential wars breaking out in Russia, the Middle East, the horrible economic data and falling currencies around the world, something is going to cause what I call, quote, last to go markets like the Dow and paper, gold, and silver to be lost as well to the powers of economic Mother Nature. And that's why this gift of being able to buy gold and silver below the cost of production at the point where mining companies are all going out of business. The small companies are all but dead, and pretty soon the majors, who are all heavily indebted, are going to be merging just to survive. You're going to see some major supply declines, and the ability here to actually buy below the cost of production, the only asset that can probably save you.
A lot of the people who subscribe to our channel, we call ourselves reluctant preppers because we feel like we were being dragged into this against our preference by reality and by the true grave risks that are present out there. But we live with family members and coworkers and acquaintances who are either blissfully unaware or even scoff and make fun of any kind of preparedness actions on our parts. And if you could maybe give us just maybe what, if you, on your right hand, top 5 talking points that you would use that people can try to remember, and when engaging with people who are questioning and doubting the reason or the necessity of taking prudent action to sort of prepare for the worst while you're enjoying the times as they are. What would be some of those top arguments that people can bring forward when people are doubting why you should do any kind of preparedness?
Well, maybe it's easier for me, given that I have a very engaging audience to what I say. But I learned a long time ago, and I wrote an article probably 3 years ago. You can Google it. If you Google family, friends, and colleagues, Miles Franklin, you'll see it, where I said, don't take the weight of the world on your shoulders. People that your family and your friends, if they don't want to hear it, then don't talk to them about it. I mean, when you say people, they're frustrated because no one's listening, I really don't care what these other people are saying. And frankly, I don't even care anymore what my family and friends think, because it's a matter of taking care of yourself, or doing what you know is right, and for telling anyone that wants to hear about it, because you're just going to frustrate yourself talking to your mother or your brother or your good friend about about these things. Let's face it, the Western world, has been brainwashed for 50 years that dollars are money, and they're never going to change that. Even the 2008 crisis didn't get them to change it. And the levels of propaganda that are out there now, let alone these market manipulations, are only going to make it harder for them. And again, most people don't even have the means to protect themselves. So you're talking about a limited audience of people who want to hear what you have to say. The important part is that you know what's right, and that you know that taking those actions, as you say, is the right thing to do. And again, it comes down to preparing for the worst and hoping for the best. It's really not that big of a deal to buy some gold, to have some food on hand, just to be ready. It's not really that big of a deal. But as long as you do something, it's better than what everyone else is doing.
Well, even within a individual household, for example, husbands and wives who decide together how to apportion their finances, that sort of thing, if one of them is seeing what they believe to be grave concerns, to take it out of just the realm of feelings, but take it into some specifics when saying to a partner and making those family decisions of setting aside something that's more protected than relying completely on stocks, 401k and the savings account and that sort of thing. What are some of the key facts that it would be important to share at that level of decision making to come to alignment on recognizing the true nature of the risks that are present?
Well, again, there's no magic bullet here, and people don't want to listen. If you're married to someone who's going to divorce you, if you don't invest the way they want, well, then you get a divorce, or you don't invest the way you want. Fortunately, in my case, I can't say my wife is like me at my end of the spectrum, but she certainly listened and allowed me to do what I think is right. But as you say, reluctantly, there's very few of us that are all the way on one end of the spectrum, and I can't tell you how to be a great lawyer and convince someone who doesn't want to listen. It's just that simple. I mean, you have to tell them the facts. The facts are look around you at the world, at what's actually happening as opposed to what's being said in the mainstream media, and if you do want to protect yourself, I mean, it's a prudent thing to do. Regardless, do something rather than nothing.
Back on the bigger picture of what's happening in the world economy that people do see impacting their daily lives. Certainly, everybody's been noticing dramatic swings and shifts in petroleum prices. 2 years ago, we were paying anywhere from $4 to some as high as $5 a gallon for gasoline at the pump. People were having record prices for, propane to make it through the cold winters, that sort of thing. Now, it seems like fuel prices are less than half what they were back then, and our happy days here again. And what does all that have to do with the future impacts on not only the U.S. Household, but also the petrodollar? That's back to this thing of, you just made the statement about the U.S. dollar being taken for granted because people have been accepting it as money. How is that connected, and can you start us off with your understanding of what's going on with petroleum, and then secondly, what that has to do with the U.S. dollar going forward?
Right. Well, of course, to say happy days are here again because oil prices are down, no, that's not happy days. That's the worst possible thing. That's what I've been saying all along. The entire world, it's the biggest industrial business in the world is energy production. And when prices are down, it causes, I wrote an article back in October when the price was still $80 a barrel saying crashing oil prices portend unspeakable horrors. Because not only is it the biggest capital spending business in the United States, and the only one, by the way, that has produced job growth in the past 8 years, even according to the government, plus it's the only jobs that are actually good jobs. It also funds governments around the world, including OPEC, which are giant socialist governments that basically base their budget on dramatically higher prices. So, frankly, OPEC is in the same condition financially as the shale oil producers here, even though they have a much lower cost of production, simply because their spending is so high. So the falling oil price is disastrous for the global economy. But, of course, it's not just oil. It's symptomatic of all the commodities that have been falling. The CRB commodity index last month basically touched the lows of 2008. And still there's many, you talk about the, quote, housing recovery. Lumber prices are falling like a stone right now. Iron ore prices, pretty much all of the major industrial commodities. It's a major, major problem. And I was an oil analyst for 10 years on Wall Street before I was in precious metals. So I'm pretty well aware of how this works. And right now we're talking about the worst energy supply demand situation of our lifetimes. I mean, it's not even close. Inventories are literally off the charts, and they're getting larger and larger. We may even fill up our storage capacity in the United States here in the next couple of months. And it's around the world, and now we do this deal with Iran, so they could possibly be bringing on, about 1.5 million barrels per day into a market that's already 1 million barrels per day oversupplied. You have the demand at best that's flattening out right now because of the weak economy. You have Iraq is seeing their production go up, and Libya, et cetera, et cetera. Saudi has increased its production to the highest it's ever been because they're trying to sweat out all these shale producers that are junk bond financed. We're talking about $500 billion of junk bonds. So it's a very ugly situation. It's only going to weigh on the economy. And frankly, the lower the price goes, the more unhappy times are going to be. I mean, I can assure you that there's not a few people in this country right now, business-wise, that are praying for a war with Saudi Arabia and Yemen because it's the only way that the price will get up. And of course, if that happens, it'll be far worse for the geopolitical and economic stability of the world.
So one thing wanted you to see if you could follow in on that is how does this affect the petrodollar strength going forward as well?
Well, I hate that term petrodollar because it's implying that the reason that the dollar is the reserve currency is because of that agreement from 40 years ago that for Saudi and the other OPEC nations to sell oil in dollars in exchange for our military support. But the fact is that oil, as big of a market as is just one aspect of the global economy. I would bet that it's probably no more than 5% of all the spending in the global economy. So why everyone acts like let's say tomorrow Saudi Arabia said, okay, we're no longer going to sell in dollars. I mean, first of all, what are they going to sell in? Chinese yuan? It's not even a convertible, freely trading currency, and it's pegged to the dollar on top of that. But let's say they did say that. So what? If they said if everyone said all of our trade will be in yuan, that's one thing. But petrodollar, I think, is an overstated statement. The fact is that around the world, the movement away from the dollar is accelerating for the future because you see the Chinese making all these currency agreements around the world, but the dollar is still the reserve currency because it's the most widely held. And my guess is, look, I said 2 years ago when everyone said the dollar will collapse, I said, no, the dollar is going to explode higher like it did in 2008 because of the crisis, because of liquidity. Nothing more than that. It's the most liquid asset, and that's why people are selling currencies around the world and buying it. And I said, what's going to happen is you're going to see the dollar keep going up, up, up against other currencies, not against stuff. And then eventually the system will collapse and there'll be a new system. But the petrodollar, to me, is just one aspect of what's going to happen in the future system where people are not going to be pricing everything in dollars. There'll be some new currency, whether it's Chinese yuan or something else, and that will be the new standard of what oil and other things get sold for.
So that leads to another question. People who are buying precious metals as a real money, tangible hedge against the collapse of a fiat currency system still are faced with in this last phase, though, if the dollar is going to be seen as if it's seen as a safe haven of kinds within the fiat currency realm, is there any good reason for people to accumulate physical dollars? I mean, to hold cash as well as they're holding precious metals in this current phase before that change to where precious metals would be what you want to be exclusively in.
Well, look, I'm not a financial advisor, and I mean, I'm certainly not going to give people advice of how they invest because all these things are investing. You own gold and silver. You are holding savings. You are holding insurance. If you buy currencies with the hope of one or going down or up against the other, you're taking your life into your hands. I frankly have said all along that I believe the dollar is going to go up. It's documented against all these currencies, including the Chinese yuan. I think that the biggest bang of all is going to be when the Chinese devalue the yuan, not revalue it. Everyone thinks, oh, China's so strong, it's going to go up if they ever depeg. No, believe me, if they depeg it, it's going to be because it's collapsing, and they need it. They need it to collapse to win what I call the final currency war. Right now, they're losing market share, which is why their economy is falling apart right now, and they need it back. So they want the lower currency, and with all that's going on there, if they depeg it, it's going to go down in value. So I think that the dollar has nowhere to go up, especially if you talk about the dollar index. I mean, look what's in the dollar index. You have the euro, which there may not even be a euro a year or two from now, and you have the yen, which has a purposeful, overt plan to destroy the yen. So the dollar is not going to go down any kind until against other currencies, especially these second and third tier currencies. And if you're asking me what currencies would I own other than gold, I would own the dollar, of course, because I'm certainly not going to own the ruble or the South American currencies or anything related to Europe. But that's just it's the lesser of evils, basically.
On that principle or that phenomenon of governments debasing and race to debase their currencies, again, seems counterintuitive to a lot of people. Can you give us some insight in what is the stated reason on what are the pressures that are driving that so that the countries are actually doing that, and how is that likely to actually, what are the effects of that likely to be rather than what the stated intent is?
The effect is a gigantic failure, because look at Japan, okay? Abenomics has doubled the yen supply after it's been QE'd and, ZERPed for the last 7 or 8 years, actually for 10 or 20 years. They've been at that stage, and the economy is at the worst that it's ever been. And that's after the yen has collapsed. And believe me, it has far more to collapse from here. So no, it doesn't do anything in practicality. But politically speaking, it makes sense because on paper, if you devalue your currency, theoretically your products are cheaper to buy for foreigners. Like if they devalue the yen, that means that they can sell Toyotas in the United States cheaper than Chevrolets and theoretically get more market share. The problem is that in actuality, the yen that they are receiving let's say they sell a Toyota in the States and then it gets translated back to yen in Japan, is worth less. So yes, they have more theoretical profits but less purchasing power. And so yes, that helps the corporations, and theoretically it does add some jobs, but it causes higher inflation in the country and hurts, as they say, the 99% that don't see it. That's why Japanese retail sales have plummeted. And on top of that, adding insult to injury, they had a current account surplus, a trade surplus for decades, and now they're having massive deficits. So the fact is it's not working because there are other ramifications of this inflation that's caused by the lower yen that don't get incorporated into this, as I say, on paper analysis. So no, it doesn't help at all. But politically speaking, if you want to be, it's the perfect example. What's going on is here in the States, because the dollar is exploding higher, the currency. Look, Johnson & Johnson reported earnings today. They said our earnings were hit 7% by currency changes, and we're expecting lower earnings this year than we had expected for that very reason. That's why everyone from the U.S. Commerce Secretary to the White House itself, and me way before that, have said that the dollar is too strong. And that's why yet another reason why the Fed is going to be forced into more QE and more zero interest rates, because this is the final currency war. They need the dollar to be lower so that they can politically say we're working to get more jobs. Of course, then that brings back into play China, because China has pegged their currency to the dollar. And because their economy is so bad, the rising dollar is causing them to be uncompetitive, which makes them mad, which is why they're probably going to devalue. And when they devalue, it's going to be like a tidal wave hit the global economy. You're going to see massive deflation around the world and inflation in China.
Okay, so this seems like an unwinnable race. It seems like a race to the bottom. And what's a way out? What's a way is there a way that this doesn't end horribly for the ordinary person?
No, there isn't. This is like a whirlpool. You don't escape the whirlpool or the black hole once you're in it. It's a mathematical certainty, and that's the definition of a Ponzi scheme. That's what people don't understand. They hear the term Ponzi scheme, and they think it's some kind of like joke of a term. Or when they reply it to Bernie Madoff, they don't realize that he was actually running a theoretical Ponzi scheme as opposed to, he was a criminal, he just stole money. No, when you need something to grow larger and larger just to survive, and of course, it not only has to grow larger, but you have to maintain confidence in its integrity. That's what a Ponzi scheme is. That's what fiat currency is. That's what QE is. That's what zero interest rates is. Once you're down at zero, you can't ever rebound from it. I mean, you can try. You can say, well, we goosed our stock markets enough that we can pretend and say, yes, we're raising rates by a quarter percentage point at some point. But even that will probably topple the whole thing of dominoes because of all the debt that's been built up in this Ponzi scheme. You can't have higher interest rates when you have exponentially growing debt and a falling economy. So it's really just a theoretical construct that doesn't work. And again, my point is it's irreversible. There's no, oh, well, if we just do this, it'll get better. No, it won't get better. The debt will keep going up until it falls upon itself. And the debt will either be discharged by default or by hyperinflation, one or the other. And, you know, if we look at history, we know which choice the central banks are going to choose.
And that's hyperinflation as a last-ditch panic effort to try to still maintain control and not to admit defeat.
Well, yeah, I mean, certainly not to admit defeat. It's the ultimate can kicker. Either you print money and you survive another day, even though that day may, you know, tomorrow may be the day things end, or you do nothing and everything falls apart. If all these countries just said, you know, we're going to do the right thing, I mean, there is no right thing anymore. If we're going to do what theoretically was the right thing in the past, we're no longer going to manage interest rates. We're no longer going to manage financial markets. We're just going to get rid of our central banks and let things happen as they will. Well, you'll have a deflationary collapse the next day, the very next day. That's why they need to be there, buying up stocks, buying up treasury bonds, jawboning and saying, don't worry, we'll buy more, we'll do whatever it takes. And so, you know, this is the choice they take. But that just blows the Ponzi scheme up larger until eventually it collapses. It always does, and it always will.
So for the individual homeowner that feels certain of the impending risk, nobody seems to know whether it's, you know, days, months, years, decades that this.
It's not years and decades.
Okay, so your confidence in saying that comes from what?
Because mathematically, you can't just raise debt exponentially. I mean, people have to look at the state of the economy. The economy of the world is today objectively the worst it's been in our lifetimes, and it's getting worse. I mean, to say, well, if they print more money, it's going to get better. No, that's what's made it worse. And since 2008, they print more money than in all the years combined, and that's why we're in the situation we are now. The U.S. national debt was 10 trillion in 2008. Now it's 18 trillion. Actually, it's more than that. They froze it, but you'll see it'll jump to 19 pretty soon. And then the 5 trillion off balance sheet and the 100+ trillion of unfunded liabilities. That number is only going to go up, which means interest rates have to stay down, which means money printing has to accelerate. And that's here in the supposedly best economy. Around the world, we've seen currencies in all-out collapse. From all of South America to even the euro, the ruble, the yen, the Chinese yuan is waiting on deck to depeg itself, and wait till you see what it does when it gets depegged. There's a mathematical, we reached peak debt a while ago, and now all the debt that's being piled on by this money printing is only making things worse. So whether it's something that's financial, economic, or geopolitical, something is going to upset the apple cart, and, I say near term. I don't mean it has to be tomorrow or something, but it's not decades. I can't even believe we'll get through the year without, for instance, Greece defaulting and a whole gigantic daisy chain in the euro. But, I can't predict the time. But no, it's not decades away. And I'd be surprised if it's even years away before the next big crisis hits.
So some people have been predicting that they should wait because there's lower precious metals prices yet to come. For other people, they say, I can't wait because I need to start accumulating now because what if I miss the boat? Your advice, I believe in the past, has been to take this current low price environment as a gift and to use that opportunity for accumulating. Is there any thing you want to add to that picture for people at this time?
Well, yes, because again, they are savings. You're not investing. And even with the whole, dollar cost averaging, you're not dollar cost averaging. This is not an investment. You're talking about these are historically low prices compared to the amount of money that's printed, compared to the amount of demand, compared to the amount of expected supply, what's going on in the currency markets. I mean, whether you bought, let's say, everyone listening is not necessarily American, because remember, in other currencies, gold is doing very well right now. But in America, whether you buy it at $1,100 or $1,200 or $1,300, I mean, who cares? theoretically, it should be in the thousands right now, and if it weren't for manipulation, it would be. And at any time, we've seen physical shortages over the years. In 2008, the whole world ran out. There was nothing. You couldn't buy any. And in parts of 11, 13, and 14, we had tightness in the silver market. So, it's an accident waiting to happen. And to say, well, I'm going to wait till it goes down more, how much more? I remember in 2008, for instance, silver, the paper price fell from 21 to 9, but the physical price never fell. You couldn't even buy it, and the price was never really $9. So again, if you have a crisis and you don't have it, you're probably not going to be able to get it.
Well, I think that pretty much covers what we were hoping to. And before we wrap up, is there anything else, final thoughts you have for our audience?
No, look, just give us a call, Miles Franklin, 800-822-8080. And again, prepare for the worst and hope for the best. It's really no big deal to prepare. I mean, it's very simple. And if you're talking about financially, which is my area of expertise, I mean, you're buying below the cost of production. So, all these newsletter writers trying to convince you gold is going below 1,000. Below 1,000, there won't be any mining companies left. I mean, at this point, they're all on the verge of bankruptcy. So I wouldn't worry too much about that. Just, worry about ensuring your future by saving in the only currency that can't be hyperinflated. It's that simple.
Well, Andy, I really appreciate you taking the time to visit us again here on Reluctant Preppers and share your perspectives with our audience, and we'd love to have you back again.
I'd be happy to do it.